Hello everyone and welcome back. First of all, apologies. I couldn't post a video for the last 3-4 months. I will come up with a video describing my performance in these months. By the way, it was terrible and I will talk about what went wrong, etc. in a later video. But today I thought I'll keep it quick and talk about a trade that I took just now, and it's an arbitrage trade, and today is the last day if you want to go ahead with this just like me. So let's get started. So today we're going to discuss about Vedanta. As you know, Vedanta is a share that has a good history of dividends, is a company that gives good dividend yields, and the latest dividend has been declared at 20.5 rupees on record date April 7th and ex date April 6th. So that means today, April 5th, is the last day uh, for if you want to get the dividend by investing in Vedanta shares. Now, do you just invest in Vedanta shares and keep it like that? You can do that, that is one way, but usually after the dividend date, the share amount goes down by the same amount as the dividend given out. And on top of that, there could be additional volatility, news flow, etc. So is there a way wherein we can capture just this dividend amount without taking any extra risk? Uh, in this case, it happens to be that there is a way you can do an arbitrage trade, and let me show what I did. So I'll be using Opstar to show you what I did. Since Opstar doesn't have a provision to add the spot numbers, I have used futures for both legs, but first leg is actually the cash segment. That is, I actually bought 2000 shares. 2000 is the lot size. I actually bought 2000 shares of Vedanta. It was trading at around 283.74. And then I went ahead and shorted this month's future, which was trading at around 279.3. You can see it's an unusual thing trading at discount, but for shares that have declared a dividend, usually that month's future will be trading at a discount. All I had to make sure was that the discount amount was not as high as the dividend amount. Here it is about 4.5 rupees, whereas the dividend is 20 rupees. Now, this is a completely hedged position. So what I mean by that is, doesn't matter where Vedanta goes, if it goes 380 or 195, doesn't matter where it goes. The gain that I make in shares will be the same as the loss that I make in futures. And if I don't mess up, my maximum loss in these two legs will be around 9,000 rupees. That is because of the discount in futures. So if I do nothing and take both of these legs till delivery, that is 27th April, I will make a loss of 9,000 rupees. But what is the gain here? The dividend received will be 2000 into 20.5, which is 41,000 rupees. Now, 41,000 minus the loss, like I'll try to not make even this much loss, but let's say I make this much. 41 minus 9,000 is 32,000. Some this and that charges will be 1 or 2,000, so 30,000 rupee profit. If I close all the legs in 1 week, in a matter of 1 week, 30,000 profit is something really good. And what is the capital required? Of course, for buying the shares, you need a lot of capital. 283.74 is my buy price into number of shares. This is the capital required. And anyway, for selling futures or shorting futures, I anyway use collateral. So that means 5.7 lakh is the capital required for this strategy. And expected profit is around 32,000. So yeah, this is an arbitrage trade, and once again reminding that these opportunities don't come often, and many shares that declare dividend, first of all, won't have uh, futures. They won't have futures or any other derivatives, and even if they do, the discount amount will usually be equal to the dividend amount, making this arbitrage trade impossible. But with Vedanta, it was possible, so I'm trying it, and I will keep you guys posted. Until then, take care and have a happy investment journey.